If your personal credit utilization is high, you might be wondering, can you still get approved for business credit? The short answer for you, yes. But there's going to be a catch for you. Most lenders, they don't like to see high utilization. They often see it as a very red flag for them. And this makes it harder for you to get approved. But don't worry, my friends. I'm going to show you exactly how to work around this issue, lower utilization fast, and start getting approved for high limit business credit cards. Plus, at the end of this video, I'll be walking you through how to get a personal loan to wipe out your debt and quickly fix your utilization. If you're new to my channel, my name is Chess. I've secured well over 400K in business funding for my businesses, and I help entrepreneurs and business owners, just like yourself, secure business funding for their business as well. So everything I teach here is based on real world experiences, either coming from myself or from my clients. And in this video, I'll be covering you how high utilization affects your business credit card applications and 3 ways to lower your debt before applying for these business funding. Also, I'll be showing you how to still qualify for business credit even if your utilization is high. And at the end of this video, I'll be showing you my last resort method to get you out of debt and utilization jail and clear your debt fast. So let's get right into it. First and foremost, I would like to let you know, how does your high utilization affect your business credit card applications? Well, when you do apply for business credit, most lenders, they do check your personal credit, even if they do not report to it. And one of the biggest factors that I see is that they do look at your credit utilization. High utilization, it does signal that you are over leveraged, and it does pose a very big risk for the lenders, making your approvals much harder. And most lenders, they like to see your personal utilization anywhere from 2% to 8%. Anything above that does start to raise red flags. But let me give you a real life example to put this into perspective. I had a client who had 40% utilization, and even though he had 700 plus credit score, they kept denying him for business credit cards. Why is this? This is because lenders saw him as a high risk. But after applying the strategies that I'm about to drop down for you, they dropped their utilization within 90 days. And he was able to secure 100K plus in business funding from that. So if your utilization is high, don't worry. I'm going to be showing you how to fix this fast. And yeah, next we'll go over 3 ways to lower your debt before getting into business funding. One of the fastest way to lower your utilization is by taking out a personal loan to consolidate your credit card debt. And here's why this works. This is because credit cards, they typically have a high interest rate, sometimes anywhere from 20% or more. And personal loans, they can give you a fixed monthly payment with a much lower interest rate, anywhere from 8% to 15%, maybe even lower for some borrowers. What's the best part of all this? Is because even when you owe the same amount of money, your credit utilization drops. This is because the credit bureaus don't view the installment loans the same way they see as a credit card balance. So instead of carrying a $10,000 across multiple credit cards at 25% interest, you can consolidate all of that into one loan at 10% interest, maybe even lower. Saving you money while improving your scores? Hell yeah. Our second method is having a strategic paydown method and how the timing of paying your statements matter. So most people think that making payments help their credit utilization. Yes, but if you don't time it right, your credit report may not show, will still show your high balances. And why? Because credit companies report your balances on the statement date, not on the due date. If you pay off a large chunk after your statement date, your credit report will still show a high utilization percentage. So here are 3 tips of what you should do. Number one, always pay down utilization before the statement closing date. This way, it doesn't lower your utilization or lower your balance, and that gets reported to the credit bureaus. And if you don't know your statement date, you can always look at your credit card statement or your banking app. It will either show you your statement date or the due date. And the statement date is usually 5 days before your due date. Remember that. Our second tip for you is going to be focusing on cards with the highest utilization first to get the biggest boost on your credit. And last, if possible, request a soft pull credit line increase to instantly lower the utilization ratio without making a payment. This strategy can help drop your utilization very fast for you and improve your approvals odds for getting business credit. But if this method does not work for you, you can always try the next method, which is to borrow from friends or family. If you can't borrow money from them, you can also utilize your credit to help your situation. Now I get it. Not everyone wants to take a loan, not take out a loan, and maybe you don't even qualify for a personal loan, or you just want to avoid extra debt. In that case, borrowing money from friends or family to pay off your high utilization debt, it could be a very solid option for you. Why does this help for you? This is because you're not dealing with high interest rates, you are not getting hard inquiries on your credit report, and also once you secure the business funding, you pay it back immediately. And you might be thinking, what if they can't lend you the money? Well, here's another strategy for you. You can ask them to add you as an authorized user on their credit card. And this is only if they have a credit card with low balance and a high limit. Being added as an authorized user, it does lower your utilization almost instantly, or maybe the next credit reporting period. This can boost your credit score very quick because their good credit history now reflects on your report. We just do have to make sure that they have strong payment history because if they do miss a payment or they have a bad payment score, it could actually hurt your score instead of helping you. So here's an example of how everything works. Let me pull out my trusty board. All right, here we go. Here we go. Here we go. All right. So let's say you have a total personal credit limit of $10,000 and your utilization is at 40%. So we're about 4,000 out of 10,000. That makes you at 40%. Our goal is to lower utilization to 8% before applying for more personal credit. That way we can stabilize your utilization before business funding. So we would either pay about 3,200 office to get to 8%, or we can add an authorized user to get it to 8%. And here's how we can figure out how much authorized users we need to add. So our debt is at 4,000, so we need to get it to. So what we do is divide that by 8% minus our original personal credit limit, which is 10%. This gets us to $40,000. From here, you can apply for another $40,000 in personal credit limits and remove the authorized users to stay at 8% and start business funding. This is an easy way for you to leverage someone else's credit without them actually giving you the money. And if you can't find an authorized user from your friends or your family, you could try to buy a trade line with this video on the top right over there. And now, what if none of these methods work for you? Well, you can try to get business credit even with a high utilization. And I'm going to be going over 3 methods that might work for you. So, our first method is to apply with lenders that ignore high utilization. These are going to be some fintech lenders like Divvy, Ramp, and Brex. They base your approvals based on your revenue rather than your personal score. The second method I have for you is to use business credit that does not require personal guarantee. You can start with net 30 vendors like Uline, Quill, Granger. They can help you build business credit also without relying on your personal credit. And number 3 is to show strong business financial. So if you already have steady revenue, some lenders will approve you based on your cash flow instead of your credit score. So make sure that you're keeping your business finances in very good shape. And but we all know that we cannot utilize these products with the same flexibility that we can with business credit cards or business loans because we can't pull code hard cash from these and actually invest in your businesses. So let's talk about how we can actually fix your utilization and start playing the business funding game the right way. All right, here's the loan that I use as a get out of jail free card from my clients. I will use this method only if you qualify and if it's your last resort. And this is still called the Lightstream play. And here are the deets. So Lightstream, they do need a decent score above 720, but some lenders would go lower. You could request a loan amount of 35,000 if you have a score at least 750 plus, 25,000 if you are over 720, and a utilization under 40%. The lower, the better. So let's go over this loan, see what we can do with it. So there's a interest rate anywhere from 6.94% all the way to 25%. I've seen anyone get from 6% all the way to 11% for these loans. It's almost cut in half of what your credit card loan APR is. So very good to consolidate your loans. So we want to go to this website, lightstream.com. They are backed by, I believe, Truist or SunTrust now. Let's click apply now. So you'll be brought to this page, the loan application page. What we want to do, I've seen people do, actually, let's do individual applications. I've seen people get approved for use auto purchase from dealers. I've also seen a lot of people that get approved for home improvement or a solar loan. If you do put credit card or debt consolidation loan, you may not get approved for this loan. A lot of lenders, they do not like to play that debt consolidation loans. So let's try to do these instead. Those are going to be your a lot higher approval rates for you. So you will fill this out. I recommend doing auto pay. I've seen people get a lot higher um, approvals with that. Loan terms, I'll also do 60%. Like I told you before, for a loan amount, you could do 25,000 if you have a 720 or higher. You could do 35,000 if you do have 750 credit score or higher as well. So you could continue and you could apply for this loan. So something they would ask you for, it would not be documents required that is going to be asking for your income or any of that sorts. But what they would ask would be to confirm that you applying for the application. So they would ask for your ID, some bank statements, or they'll ask you for some proof of address. Now, after you lower your utilization and you're ready for business funding, here's a video on the top right of this video teaching you exactly the steps and requirements for you to fund your business. And if you want one-on-one help to help you secure 100K plus in business funding, apply to join my mentorship or my Done For You program in the links in the description below or in the pinned comments below as well. This is CashflowChes. I'll see you guys in the next one.